The head of digital assets at the world's largest asset manager just told the world that Bitcoin and Ethereum are essentially the only two cryptocurrencies that institutional investors actually care about, and the XRP community lost its mind. But here is the thing. The people panicking missed a data point released the same week that completely flips the narrative, and by the time this video is over, you are going to understand why Robbie Mitchnick's statement is actually one of the most bullish signals we have seen for XRP in months. Let me walk you through the framework that most creators are missing entirely, because this is not a simple story about whether BlackRock likes XRP. This is a story about how the largest institutional capital allocation machine ever built actually makes decisions, and once you understand that framework, everything that looks bearish right now starts to read completely differently. First, let's deal with what was actually said. Robbie Mitchnick, who is the managing director and head of digital assets at BlackRock, made comments framing institutional crypto demand as being overwhelmingly concentrated in Bitcoin and Ethereum, with most other tokens described as short-lived or irrelevant to serious capital allocators. That is the clip that went viral. That is what had the community hitting the panic button. Now, here is what you need to understand before you do anything with that information. Robbie Mitchnick's job at BlackRock is not to be an XRP analyst. His job is to talk about what BlackRock currently has products for. He is not going to walk into a room full of institutional clients and start advocating for assets that BlackRock does not yet offer. That is not how compliance works at a firm that manages over $10 trillion in client assets. He is going to talk about Bitcoin. He is going to talk about Ethereum because that is what he is allowed to talk about. Here is the part that actually matters for your thesis. Before Robbie Mitchnick became the head of digital assets at the biggest asset manager on earth, he spent time at Ripple. He co-authored an academic paper on fundamental valuation frameworks for crypto assets while he was there. This man knows exactly what XRP is, what the XRP ledger does, and what Ripple's institutional pipeline looks like. The idea that he genuinely believes XRP is in the same bucket as short-lived nonsense tokens is not a serious position. He cannot say what he cannot say yet. That distinction matters enormously. If you want to understand how BlackRock actually makes decisions about launching a new crypto product, Mitchnick himself outlined the framework in detail. 5 factors: client demand from pensions, endowments, insurance companies, and sovereign wealth funds, market capitalization, liquidity, maturity of the asset, portfolio fit, and of those 5, client demand from that specific tier of institutional investor weighs the heaviest. That is the actual gate, not whether XRP has utility, not whether the lawsuit is resolved, not whether ETFs are trading. The gate is whether BlackRock's most conservative clients, the ones managing retirement money for millions of people, have generated enough internal demand to justify building the product. Hit that like button if this framework is already changing how you are reading the situation, because we are just getting started. Now, here is where the data gets genuinely interesting. The same week Mitchnick's comments were circulating, Coinbase released a survey conducted with Ernst & Young. They surveyed 351 institutional investors, 96% of whom manage more than $1 billion in assets. This is not a retail sentiment poll. These are the people Mitchnick was talking about, the people BlackRock needs to clear their internal threshold. And the data inside that survey tells a completely different story than the headline everyone was reacting to. 25% of institutions surveyed are actively planning to add XRP to their portfolios in 2026. Let me put that number in context. At the time of the survey, only 18% of institutions already held XRP. That means the incoming wave of institutional XRP demand is larger than the current total holding base. 73% of those institutions said they plan to increase their crypto allocations overall this year. And critically, 56% said they intend to hold assets beyond just Bitcoin and Ethereum by year end. That is the diversification wave that BlackRock's framework is waiting for, and it is already arriving. Subscribe if you want XRP analysis that gives you a framework, not just a headline, because this is exactly the kind of data that changes how you hold. Let's look at Goldman Sachs as a case study, because this is the clearest proof point available right now. Goldman Sachs filed their quarterly 13F disclosure for the fourth quarter of 2025, and they revealed a $153.8 million position spread across 4 separate XRP ETFs: Bitwise, Franklin Templeton, Grayscale, and 21 shares. That made Goldman the single largest institutional XRP ETF holder, larger than the next 29 institutional holders combined. Goldman Sachs, one of BlackRock's direct competitors in institutional finance, made a bet of that size while BlackRock sits on the sidelines. Now ask yourself how long that dynamic persists before BlackRock's own clients start asking why Goldman can offer XRP exposure and BlackRock cannot. BlackRock's Build Fund, their tokenized treasury product, already uses Ripple's RLUSD stablecoin as collateral. Read that sentence again. BlackRock is already in Ripple's ecosystem. The relationship is already built. What is missing is not the relationship and not the belief in the asset. What is missing is the AUM threshold. Based on analysis from Canary Capital's CEO, the current thinking is that XRP ETF combined assets need to reach somewhere around $3 billion before BlackRock crosses its internal demand threshold. As of today, XRP ETFs are holding approximately $1 billion in combined AUM. The gap between here and the BlackRock trigger is about $2 billion worth of institutional inflows, and here is why that gap matters on a very specific timeline. The Clarity Act Senate markup is targeting late April. Senator Moreno has already warned that if the bill does not move before May, midterm election dynamics push it off the table for the rest of 2026. The Clarity Act is the piece of legislation that gives banks and pension funds the permanent legal framework they need to allocate to assets like XRP without compliance risk. If that bill passes, the $4 to $8 billion XRP ETF inflow scenario that analysts are projecting becomes a realistic second half of 2026 story. And if that scenario plays out, you cross the BlackRock threshold in the same move that forces pension funds and sovereign wealth funds to start allocating, which means you are not getting two separate catalysts, you are getting them simultaneously. Does the price of XRP reflect any of this? Today, XRP is trading at approximately $1.41. That is down roughly 40% from where it started the year. There is no version of this story where the current price suggests the market has priced in Goldman Sachs as the biggest XRP ETF holder, or the Clarity Act's late April timeline, or the fact that 25% of institutions surveyed are planning to add XRP this year. The market has not priced this in. The market is reacting to macro headwinds, tariff anxiety, geopolitical uncertainty, and the generalized risk-off trade that has hit every speculative asset. This is not financial advice, and I am sharing what I personally look at when I think about whether the thesis is intact, and the thesis is intact. Share this with one XRP holder who needs to hear this before they make a decision based on a single headline. Let me give you the actual framework for thinking about where we are right now. There are 3 gates between the current price and a structural re-rating of XRP. Gate 1 is Clarity Act passage, which gives institutions permanent legal comfort. Gate 2 is XRP ETF AUM crossing $3 billion, which triggers the BlackRock filing. Gate 3 is the BlackRock Aladdin distribution network, connecting 21 trillion in institutional assets to XRP exposure. Each gate has a realistic timeline and a specific catalyst tied to it. The Clarity Act gate opens in April if the Senate markup proceeds. The AUM gate opens when the regulatory catalyst brings in the projected 4 to 8 billion in institutional inflows. The BlackRock gate follows within months of that. You are not watching a story that is stalled. You are watching a story that is moving toward a sequence of events that the current price has not yet factored in. Tell me in the comments, do you think BlackRock files for an XRP ETF before the end of 2026? I want to see where this community stands because the data says the conditions are building faster than most people realize. Here is what I want you to take away from this video. When an executive at BlackRock says institutional demand is focused on Bitcoin and Ethereum, that is a statement about what BlackRock currently offers, not a statement about where institutional capital is actually flowing. The Coinbase survey tells you where the capital is flowing. Goldman Sachs' 13F tells you what sophisticated institutions are actually doing with their portfolios right now. And the Clarity Act timeline tells you when the next gate opens. The story is not bearish. The story is unfolding in the exact sequence that a measured evidence-based bull case would predict. XRP at $1.41, with Goldman Sachs already holding 153 million in ETFs, with 25% of institutions planning new allocations, with BlackRock's BLD fund already using Ripple's stablecoin as collateral, is not a story that ends here. Join the XRP army to unlock member-only weekly data reports, including my full Clarity Act vote tracking and ETF flow updates. Link is below. The people who understand the framework are the ones who hold through the noise. The price is telling you one thing right now. The data is telling you something else entirely. My job is to make sure you have the data